Joining me is Peter Schiff, CEO and Chief Global Strategist at Euro Pacific Capital. You don't like the way things look right now, huh, Peter?
No, not at all, Sandra. You know, the bottom is either going to drop out of the market or the dollar. And I'm betting actually that it's the latter. But the problem is if the Federal Reserve is prepared to sacrifice the dollar in order to save the market, real returns on U.S. assets are going to suffer dramatically as a result.
Well, I'm starting to wonder if the tune really is changing, because ordinarily I would say that a majority of our guests on set would be saying, guess what, you got to continue to buy this stock market. While the Federal Reserve continues to be involved, the bond buying program has been placed, interest rates are near zero. Can't fight this one. But all of a sudden, I feel like we have a lot of guests this morning who are saying this bubble's got to pop. Stock market's got to turn around and go lower. It's starting to sound like the consensus is that we're topping out. Would you agree?
Well, in real terms, if you want to adjust the Dow for the price of gold, I think that it's going to continue to fall in gold terms, regardless what it does in dollar terms. Look, I listened to your interview with Harry Dent, who's made a lot of big calls. Normally, he times the market poorly, but Harry would actually be right if the Federal Reserve did the right thing, if Janet Yellen raised interest rates aggressively, sold government bonds, fought inflation, defended the dollar, the market would crash and we'd be in a huge recession. I do not think she's going to do that. I think Janet Yellen is going to ignore the dollar. She's going to ignore accelerating inflation. She's going to keep printing money because she believes that's what grows economies and creates jobs.
Well, it sounds like you're saying that she's in a lose-lose scenario, Peter. What should the Fed do right now?
The Fed should reverse its policy. Its policy has been a mistake. It has inflated a bubble, and it has prevented legitimate economic growth from taking place.
Well, you're not telling me what they should do.
We had serious structural problems.
Well, all right.
Look, the economy has serious structural problems that are the result of bad monetary policy in the past. We shouldn't continue to cover them up with more bad monetary policy. Right? So we needed to have a more severe recession in 2008, 2009. Unfortunately, we didn't get it. The Fed cut it short by stimulating another bubble. But we have bigger problems that have not been addressed.
All right, Peter Schiff, we've gotten your take this morning. We add another bear to the mix on this down day for the markets. Peter Schiff, we thank you for joining us. Keith, Mike, Scott, I want to get your thoughts.